Good morning, Lincoln Mitchell. All right, here we go. I want to show you a good losing trade. Is there such thing as a good losing trade? Yes, there is. There's a such thing as a good losing trade. I run basically a little bit over $1, as you can tell up here, right here. And I want to show you this trade I took this morning. Uh, well, that's not, I wasn't looking at the whole picture, but right here on this trade, as you can tell, when this broke this area here, it should have at least got to this area. It should have touched this line, retested this line again. There's a little support here, resistance here, but it still should hit because you see that triple top. Well, I said, okay, I want to scalp this. I was going to scalp it maybe 4 or 5 pips to at least get back up to here. As soon as I went into this trade, now these lines here, these are not support resistance. These are certain lines I find that nobody else knows how to find. And no, I'm not going to teach anybody that strategy. But so I went into this trade right here to go up. I put a seriously tight stop loss on this trade because if you can tell, it had this temporary uptrend and I was going to trade this temporary uptrend right there. That's what I was going for. Right there. Just like that. Just like that. That's exactly what I was going for, to break back into this area here. Well, these lines are real crucial lines to my trading. And that's why I call it a good losing trade. So as soon as I went into this trade, it went up just a little bit. Now, I know by trading, it should not get under this line. It definitely as hell shouldn't break this damn line. So I put a tight stop loss. I put a tight one. Because I said, okay, this is going to be a good entry, just a tad bit under 50% Fibonacci retracement. That should go and soon back up and come retest all this area up here. As soon as this dropped right here, broke underneath this, I knew I was in trouble. I knew it. That's why I had this line here. This orange line was a big warning. Say, hey, Lincoln, this thing should not get under this line. That's why the tight stop loss was. These are only times you set a tight stop loss is when you knew a trade, especially if you're scalp like I do, you know a trade shouldn't do certain things. Like right now, I wanted to come back up and retest this area. Then I'm going to take it down. But I set a tight stop loss, and this thing just dropped down. As you can still see, it's still dropping. I was waiting for another recoil for me to get into it. And no, that's not it in the background. That's a pound, yen. That's why I took a $4 loss. I'm glad I did because right now I'd be about $6, $7 more on top of that. Always know what you're trading and how you need to know your price actions. It's very, very important to know your price actions. I knew this shouldn't have gotten by this line. There's no way it should have passed this line. So I put my stop loss right there. I said, if that thing passed that line, I'm in trouble. And so it turned out to be a good losing trade because I was wrong, but I took a very, very small minimum loss. If I would have been right, I would have got almost double my money. I would have got 7 pips out of it versus 4. So I was risking 4 pips to get 7 pips, which ain't bad when you're scalping. And that's what I was doing. I was risking 4 to get 7. And of course, I lost the 4, but, you can recover from that. But anyway, that's called a good losing trade by Lincoln.